Good morning. Today is Thursday, July the 13th. The time right now in Singapore is 11:51. We are 9 minutes to noon. And overnight, we have quite a bit of fireworks on Wall Street itself based on the release of the US Consumer Price Index, or the CPI. The number came in very much in line with market expectation. Market was expecting CPI prices continue to ease back, and it did. And the headline year-on-year CPI numbers has dropped to 3%, and that is obviously something to cheer about. But the thing is that the core inflation, however, remains rather sticky at 4.8%, although it did drop from 5%. So over the last 6 to 7 months or so, we have seen that the core inflation has been basically stuck around the 5% range. And this is definitely something that concerns the Federal Reserve, because after 15 months of very aggressive rate hikes, they are still not able to bring down the core inflation. So this will be something that we have to consider as to what the Federal Reserve will do going forward. But right now, based on the rather attractive year-on-year headline CPI numbers of 3%, market now has an expectation that the Federal Reserve is probably done with their rate hikes. And of course, on Monday itself, we have heard various Fed official came online to say that we are very near the end of the rate hike cycle, and this definitely gives credence to that belief. And of course, last night the market actually took the opportunity to take equity prices a lot higher, so much so that the S&P 500 and Nasdaq 100 both registered new high for the year. However, in the Dow Jones itself, which is what you are seeing right now on a 4 hours time frame, the market did rally to a high of 34,586.94. However, it is just short of taking out the June high at 34,588.68. So that was a disappointment. However, what's intriguing is that at the point where the market registered the high for yesterday night, the market ended up with a reversal pattern. You can see that this line over here, this candle bar here, is a classical example of a reversal pattern. Now, of course, this is a little bit too premature to say that definitely we're going to see a reversal, but it does suggest that the prices are heading lower if this is to be believed. Now, let's have to watch what happened for the remaining of the week itself. So this is the outlook. Right now, the price is within the bracket of prices which I have highlighted throughout the week itself as being an area of vulnerability, in which I do expect selling interest to re-emerge. That level is 34,168 to 34,712. Now, if this market actually pulls back, then my expectation is for the market to head towards 33,400 to 33,600 thereabout. Now, whether the market can hold at the level remains to be seen, and if we do have a plunge below 33,000, obviously the bets are all off. So in the meantime, we just have to keep our eyes glued. In the S&P 500, like I said earlier on, we have a marginal high for the year at 4,488.34, and this is definitely something that we will be looking at, because right now the prices are getting very, very close to my ideal bracket of prices, in which I do expect some kind of reaction, and that level is 4,513 to 4,537.3. So do watch out for the market to struggle within this bracket of prices if the market continue to edge higher tonight. So do watch out for that. And in the meantime, the nearby support is probably around 4,328 that we saw over here on June 26. In the meantime, let's watch out. Okay. In the Nasdaq itself, again, we have a marginal high for the year at 15,364.09, and this is just marginally above the previous high, which was last seen on June 16 at 15,307. So right now the market here is very tricky. There is possibility an ingredient for a fake move here, because the market just managed to take out the previous high without having to close significantly higher. So this laid the groundwork for a potential fake move here to happen, meaning to say the market could actually turn around quickly and hit lower. So do watch out for that possibility in the first 4 hours of trading tonight. Okay, over in Asia, we can see that the Nikkei has stabilized. Nikkei has been falling overnight, and we can see that this morning the market has been rebounding. The low yesterday was 31,791.7, and this is just marginally outside of my preferred buy zone here at 31,950 to 32,300 levels. And let's see what they can make out of it. If this market can really stabilize at yesterday's low at 31,791.7, then the market has the potential to edge higher. This time we want to see if they can convincingly take out the previous high at 33,772.9. okay, because the previous attempt on Monday itself has failed. We will have to go and see what they make out of this. And over in Hong Kong, we can see the extended rally that we are seeing in Hong Kong. This could be a relief rally, and the data suggests that the credit creation in China has actually been behind the reason why the Hong Kong market has been rebounding, although we don't see the same thing happening in Chinese equity markets. But this is definitely a relief rally if there's going to be one. So the immediate barrier I have mentioned previously is 19,450. So the market here is going to be crucial. If it can cross over and close above that, then of course it opens up the possibility of a challenge of 20,155. Unless it does though, the market has the potential to unravel. So do watch out for that as well. Over in Shanghai Composite Index, we can see that the rebound has just started this morning. It is still very, very tentative. Like I say, the market, if it can hold at 3,183 to 3,200 levels, it has a potential to do a three-wave corrective rebound, possibly challenging the 3,276 point, or rather 3,277 that we saw here on June the 16th. So this is something that we can aim for. So do look out for that possibility as well. Over in energy market, we see a massive run-up in energy prices. As we are saying this morning, the market went up to a high of $76.11. Now, this is, of course, very, very bullish as far as the energy market is concerned. But now it's getting very close to my target of $78 to $80. So we will watch for any kind of pullback. If we do get a pullback, minor as it may be, especially in a very minor three-way pullback, somewhere between $72.60 to $74, that could be a buy area for the final assault into the $78 to $80 bracket, okay, which is, I do expect some kind of selling interest to re-emerge here. Over in gold, we also saw a massive run-up in gold on the back of a declining dollar. And last night, we can see that the massive run-up is immediately after the release of the CPI numbers. And right now, this morning, we have a high of $1,961.75 per ounce. Now, we are getting very close to the first barrier, which is at $1,970.25. So let's see if there's going to be any reaction here. But if we do get a pullback in the meantime, to somewhere between 1,939 to 1,948, for example, that could be an area to pick up some more long position. Basically, although I said I want to get out at the $1,940, I did not, because I was waiting for the CPI number to be released to make a final decision. But when I saw gold prices surge the way it did, I knew that I had to hang on for a little while longer. So in the meantime, I still hang on to my gold position, and I might add position at this $1,939 to $1,948 range for a breakthrough above 1,983.5. Okay, so this is building up to be something a lot more interesting than I was previously anticipating. In the silver market, we also saw a corresponding rally in the silver prices, and this time it does look like silver is looking a lot more bullish than gold market. Now the market again is getting very close to my ideal target here, $24.46 to $24.92. The current high so far this morning is $24.25. We are not that far away. So in the meantime, if we do get a pullback, well and good, $24.60 to $24.85 could be an area to buy for another push higher. Now, I won't say this is going to be the ultimate target. I just want to see a reaction here. Hopefully, there's going to be a pullback for me to buy at a much cheaper price, because I think something else is happening in precious metal market, because the rate in which the dollar is falling is a little bit overdone, and do expect some kind of near-term correction to come in soon, and that could actually give us the chance to anchor in a buy in either gold or silver. Now, in the dollar index that I was saying, it has been declining, and it has been declining very sharply. Last night's CPI numbers added to the fuel, and we can see the wholesale dumping of dollar as far as the dollar index is concerned. I mentioned a 104.62 could be unfolding as a larger degree three wave towards the 99.4 to 100.15, and right now we are very, very close. We are already at 100.16, so we are not that far away. So the downside potential here, if you have not already gone short, do not sell here. Okay, this will be suicidal if you sell somewhere here, because the risk of a rebound after the market, consider that it may actually dip a little bit lower into this bracket of prices, is not that great. So do not attempt to sell this market at its current level. Instead, look for a rebound, and if we do get a rebound, we can anchor a short at much higher levels. So in the meantime, just watch this market unfold. Okay, over in the principal currency, the same thing. If the dollar is almost towards the end of its run, that means the other principal currency rally is almost near its current sequence. Okay, so we are saying that in the euro dollar, the market has actually gone up a lot more than I expected. This is totally unexpected, but again, nothing can be ruled out in currency markets or in markets per se. So the high traded this morning is a 111.50 thereabout, and upside is about 112 to 113. So not much room left for you to buy at this current level. Instead, wait for a reaction within the 112 to 113 even levels, and hopefully the market can come back and test the 109.5. So this is the immediate bottom that if the market is going to do a pullback, that could be an area of support. Over in sterling, we can see sterling also edged higher overnight. This morning we see a run up above 130 for the first time in as many months. So we can see the market is approaching the ideal target of 130.70 to 131.85. So this bracket of prices again is very nearby. Do not attempt to buy this current level in the sterling. In fact, wait for a reaction somewhere between 130.70 to 131.85. Now, Aussie also went up a lot stronger than I expected, so there is always surprises in markets. The market ran up to 0.6815 thereabout, and looks like it is probably going to go higher. So I do not have a view right now because this market move is actually very strong. So on the other hand, if the market breaks 0.69, it does appear that we are doing a larger degree three-wave rally here, targeting somewhere between 0.7 here. So do watch out for an extended move into the 0.7 range. So 70 cents is a very convenient level, so it may actually hit there. Okay, dollar Canadian, on the other hand, is also looking very much like the dollar index, almost near its target. I have always mentioned that the market is probably going down to test the 131.16 levels and perhaps even lower. My original target is 130 to 131. So the market already traded to a low of 131.44 last night, and it does looks like the trajectory appears to suggest that market at 131.16 may not hold, and the market have a danger of going into this bracket of prices between 130 to 131. And if you want to go and buy dollar versus the Canadian, that will be a much better level to consider. Dollar yen has practically gone off the cliff, and you can see that the acceleration to the downside has actually gained pace. The market now traded to a low of 138.50, which is already below my original target of 138.70. So now the market is already very stretched. So do watch out for the possibility of a rebound, but any rebound here, I think, okay, should be contained to no more than 140.70. So do watch out for any kind of a rebound, and maybe this is going to be giving us a chance to anchor in a short, although this is not ideal. Those who have not already sold, then the next best place to do so, if you can say that, is about 139.70 to 140.70. okay. Over in crypto, we don't see much of activity. In fact, crypto in terms of Bitcoin has gone into a sleep mode. So the market right now is basically consolidating, and like I say, this consolidation may take a while, maybe a week, and the nearest I can see this ending is probably this weekend, if not early next week. So this market is going to grind and grind and grind. Hopefully it will go down to test the 29,000 to 29,500 levels for us to actually see if it can support. So if market can find any kind of support around this level of 28,800 to 29,550, that would be a great area to pick up some more Bitcoin. So in the meantime, that's all I have for you. You take care, and bye-bye.